Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. With this being the last full trading week of 2013, we thought that it was a good time to take a little bit of a look back at some of the top stories for this year with our research director, Shiraz Mian, equity strategist Tracy Reineck, and ETF strategist Eric Dutram. Taper certainly among one of the top stories of 2013, and we may get a resolution this week. We may not get a resolution this week to that taper question as the Fed holds its last meeting of 2013, and of course Ben Bernanke's last meeting too as Fed chairman. But Shiraz, you say that the taper question is really the only real reason that the market has been kept from showing its typical seasonal behavior.
That's right. I wrote about it earlier this week as well, earlier last week as well. In fact, the reason why the Santa rally hasn't arrived yet, though Santa rally typically does come a little bit later in the month, is primarily because of these taper concerns. And I sincerely hope that they do come out with the taper announcement, and even if it's a very, very slow unwind, we are at least past this will they or won't they phase in 2014, and we enter with a clean slate. So at least we don't have to worry about this question, and this remains a 2013 story. And a year from now, we're not again talking about taper and how it unfolded or did not.
That might be some wishful thinking on your part, that it remains a 2013 story. I don't know, but Eric over there seems to feel the Fed has to taper earlier rather than later, otherwise they risk losing their credibility with investors.
Definitely. I think a lot of investors were really looking for a taper in September, and then we were really surprised that this didn't happen. And now with the kind of stronger data we've been seeing, strong unemployment numbers, coming down. Yes, exactly. And the consumer confidence has been very strong as well. And with DC not really being much of an issue, actually agreeing to something for once at a time, there's really no excuse, in my mind at least, to not at least start the tapering process. Unfortunately, though, it might take a little while for the taper to fully taper, if you will. So we could be talking about this well into 2014.
Well, you mentioned September. Tracy feels that the top story was that September fake-out on the taper issue.
Yeah, because the market was already pricing it in, both the bond market and the stock market, and it just gave fuel to the fire for the rally to really pick up steam there and, barrel into the end of the year. And, I'd like to think that they're going to do something this week about the taper, but I still under the belief that they don't have the guts to do it. I don't know why. I just don't think, because September was the perfect setup, and they panicked and didn't do it then. And I just think they're going to, push it off until January, talk about it. Oh, yes, we need to keep watching the data. And we're going to still be here talking about it in January, and maybe even, for the March meeting. I don't know. Maybe I'll be surprised.
See, buckle up. We're going to be here talking about it, okay? Whether you like it or not.
To the credibility question, I think they lost credibility on the September thing. And as Tracy mentioned, they blinked. They didn't have the guts. They were raising all these questions that they were surprised with the rise in interest rates and all of that. And it's amazing that they're holding off as long as they have been.
All right, I don't want to beat a dead horse here on the taper thing.
It's not dead yet.
I'm sure with having many more weeks ahead to talk about it, we'll just revisit it as we go here. But both you and Eric believe that the top story was actually the stock market hitting new highs. In fact, your comment of investors being more willing to pay more for the same and at times lower earnings stood out in my mind.
The biggest driver on the stock market front, and it has surprised most of us, how good the stock market performance has been this year, is primarily through the multiple expansion. And the multiple expansion is the investors' willingness to pay more for the same and at times lower earnings. We know that estimates have been steadily coming down. The preponderance of guidance has been negative. And I, for one, was not looking for as strong a performance as the market has shown. And that was primarily the theme at the start of the year, too. So it has been an amazing run in the stock market.
What about Carl Icahn's recent remarks that earnings are just a mirage fueled by low interest rates rather than strong management? What do you think, Eric?
I mean, it's an interesting take, but we're really going to have to see as the interest rates pick up, assuming a taper comes in, how the market's going to play out. I do think that those higher interest rates are definitely going to hurt the very rate sensitive sectors like utilities, real estate. So those are definitely going to be hurt. But for some of the other segments of the economy, it's still too early to say, I think.
All right, both you and Eric agree that you have something to add.
I have to just add to the Icahn's comment.
Quickly.
The margins are actually higher than they have been at the prior cyclical peaks, and a big contributor to that has been the lower interest rate costs. So it's when interest rates go up, that will at least, if nothing else, cap further gains in margins.
Okay. Again, both you and Eric feel that government issues made it in the top three as far as big stories of the year. Tracy, you actually say that third top, in your opinion, housing recovery.
Yeah, that's kind of been lost in all this euphoria about the stock market. But at the beginning of the year, about 25% of homeowners with a mortgage were underwater, and now it's about 11%. That's a huge change, and you're really going to see the difference going into 2014 as more people are going to be able to put their house on the market and move. People feel better when their house price goes up. I mean, obviously, it just impacts a bigger segment of the population than even when stock prices go up. Right. And we've seen it with Home Depot. I mean, they just put out even another comment about how great they think next year is going to be because everyone's renovating again. And this all works its way through the economy. So one of the dampers could be these rising mortgage rates that we've seen could slow things a little bit, but prices have come up so much. I mean, this has just been a huge story when housing was just dead in the water for the last 5 years.
And Eric, you say that in the top three, the emerging market slump. In fact, Shiraz feels that the BRICS have hit a brick wall.
Definitely, and China has come back a little bit, but Brazil has been extremely weak, and India also very bad. Indonesia, not really in the BRIC, but another very large emerging market. And then also kind of European resurgence. A lot of people had written off Europe as an investment, but they've been very strong and in some cases even beating out the U.S. market. So that's another area to watch in 2014.
All right. So for a while, the emerging markets, the BRICS particularly, were this big driver of the global economic growth. And for now, at least, it seems that the OECD markets, Europe, U.S., Japan, and all these developed markets seem to have come back into the leadership position.
Okay. Thank you all for that. There you have it. A little bit of a look back at some of the top stories of 2013. One thing that is a little bit more recent is this week's top stock picks from these folks, and that's in our next segment.